we are done with the full syllabus and as well as further questions. So it's time for us to start with past papers and model papers. So before going for the past papers, I will be starting with the CL3 pilot paper, right? So this pilot paper is a, let's say, paper that will give you the direction of how the structure, but don't compare the complexity of the pilot paper to the examination paper, because examination papers will be more harder than this. But what you have to understand is the structure, how the questions are there, how many questions are there, how many marks are allocated. So that's what you have to get to know. So after done with this, I will be starting the past papers from 2016 December till your examination. So with that, we are going to start the full past papers from the first question to the last question. And here also what we are going to do is the same thing. So before going for the paper, you need to understand how the paper is structured. So this paper, time for the paper, you have 15 minutes. 15 minutes for what? 15 minutes to read. Reading time. Reading time is 15 minutes. And then you have 3 hours. 3 hours for what? That is to writing. Writing and thinking and logically imagine you remember everything. So whatever the other things you have to do within 3 hours, right? So the paper structure, paper structure or the questions. So there are 3 sections. Section 1, then you have section 2, then section 3. So you know, corporate level, the new corporate level has 10 MCQ questions from the section 1. So section 1 includes 10, I would say, OTQs into 2. So probably these are MCQs, but then this is 20 marks. So you will be having 20 marks for these 10 OTQs, right? So this is kind of an advantage for a student who, covered the whole syllabus, who watched our all videos. And this is the reason why we are giving MCQ questions for each lesson. Now you can try those MCQ questions for each lesson. So after done with the lesson, that's the reason why we are giving MCQ. So you could try and understand the whole lesson through MCQs, so which will be useful for you to do the exam very well. So then the section 2, there are 4 questions. 4 questions. One gives 10 marks. So you will be having 40 marks for this. Then section 2, now these are like mini scenarios. Then you have 2 questions here. So one will give you 20 marks each. So with that, this is 40 marks. So when you attempt everything, that is 100 marks. So these are like complex scenario, long scenarios, right? So they will be giving a big scenario, 1.5 to 2 pages, maybe 1 page, 1.5 page, 2 page, and they are asking some questions from important lessons, important topics. So at the target areas, I will be discussing what are the important topics, what are the potential tested areas for this time examination, right? And here also you will be having some small mini scenarios like from some of the middle important lessons. And here they can ask anything from any lesson, right? So this is how the paper structure. And before going for the paper, I would like to tell you, first, do all these within 3.15 minutes, 3 hours and 15 minutes, and then you watch this video, because we have already covered the whole syllabus. You could attempt for any question now. So first of all, you have to know by writing whether you are up to the examination standards. Even this pilot paper is not up to the examination standard, but you have to write and see whether you can manage it in time, whether you are comfortable with all the knowledge components, right? So first, please try that. And when you are trying, I will be giving you a small advice. This is my personal suggestion, personal intention. With this 15 minutes, what you can do, you don't need to look at these. You don't need to look at this section 2 and section 3. Within the 15 minutes, I am telling, not at the 3 hours. So within 15 minutes, you don't need to look at this. Why? See, you have 10 OTQs, let's say MCQs. So, why cannot you try those 10 MCQs within 15 minutes? At the reading time, use your full 15 minutes to try these. So, even though you don't have an answer sheet, you have the paper. You could get your pen and put the and underline the correct answers. So at least you might done with 8 to 10 questions once the answer sheet is given. So when the 15 minutes done, you will be completing 10 MCQs, which is given 20 marks. So what happens? In 3 hours, you have to now get only 80 marks. Only 80 marks. So see, 180 minutes, you need to get 80 marks. You covered 20 marks, or let's say at least 14 marks, at least 7 questions, you covered within these 15 minutes. Now see, earlier you had 1.8 minutes for 1 mark, but now you are having 180 divided by 80, 2.25 minutes per 1 mark. So what you are trying to do is, you will be saving your time for these important, high marks questions by trying these at the initial 15 minutes, right? So we'll start with the section 1. So section 1, first MCQ. First MCQ, and we have already covered these lessons. You need to answer now. You should know the answer. Environmental Management Accounting, which is EMA, we have discussed already, has several implications in planning and decision making of the organization. Which of the following implications are true? See, they have given three implications. So you have to evaluate. Just wait, see whether this is true. Pricing should include the environmental cost implicit in production or provision of the service. Is that correct? Yes. Why? Because whatever the cost you are incurring, including the environmental cost, should be related to the product. So that cost also you have to integrate with the production, and you have to calculate the product. So the pricing should include environmental cost. So this is correct. This is correct. Then the second one. If incremental budgeting is followed, it should be changed to zero-based budgeting when implementing EMA. What is incremental budgeting and zero-based budgeting? Even we have discussed these two components in the budgeting lesson. What is incremental? Incremental is, you are getting the previous year figures and you are trying to put a percentage or an increment, then you are preparing this year budget. So it's like this. So this is 2019, this is 2020. So let's say the sales 100,000. You will be thinking, okay, 10% could be increase in the next year. So you will be putting 110. This is incremental budgeting. Then Zero-based budgeting is what? Zero-based budgeting is like you are forgetting everything what is happened in past. Let's say past sales were 100,000. Now you are forgetting this. What you are trying to do is you will analyze based on the demand, based on the other factors, based on the resources you are having, based on your marketing budget. You will be deciding a fresh amount for the 2020. That is zero-based budgeting. You are forgetting everything. You are trying to start from the beginning by thinking the other basics, by getting the information from other basics, then you are trying to get a value. So that is zero-based budgeting. So what they are telling, if incremental budgeting is follows, it should be changed to zero-based budgeting when implementing EMA. Why? Do you need to follow this kind of a budget to do the environment management accounting? Why? You don't need. Why can't you put environmental cost to incremental budget? Let's say last year not there. So from this year that is starting. Zero-based budgeting is like you are thinking from the beginning. But incremental, for the incremental budgeting, you can put new things. That is okay. So in that case, this is wrong. This is wrong. So the third one, environment implication should be incorporated in investment appraisals. Yes, in investment appraisals, normally even we are looking for the non-financial factors. After each analysis, we have to do that. I have given you some of the non-financial factors, examples also. And at the examinations also, they will be testing. Okay, after doing the NPB, what are the other factors you have to consider? So definitely, environmental implications you have to consider. So first one is correct, second one is wrong, third one is correct. So what is the answer? Answer is answer C. First and three only. Answer is C. This is C. So then we are moving to the second question. Second MCQ. The new CEO of DFK Limited keen on practicing environmental management accounting. Which of the following management accounting techniques do you recommend to account the environmental cost of DFK Limited? You have a separate slide for this. In my tude, you have a separate slide. In that slide, what are the things I have included? Now here there are 4 answers. 1, 2, 3, 4. What is included? Activity-based costing, life cycle costing, flow cost accounting, input-output analysis. What are the things I have discussed? All 4 I have discussed. In the slide, you can see all 4 are included. So, for environmental management accounting, you can have any of these costing methods. So the answer is all of these, that is answer D. Answer D. Then you have question number 3. Question number 3. Identify which pricing strategy is likely to set a high price. Now, this is from pricing chapter. So we have discussed there are 2 kind of pricing methods. The famous 2 pricing methods, skimming pricing and as well as penetration pricing. What is skimming pricing? I have put your iPhone and explain. What is that? Skimming pricing is charging a higher price to enter into the market, and you are trying to show to the customers your product is quality based on the pricing. So to follow this, definitely you should have a skimming pricing. Then when you get the skimming pricing, there are 2 answers. First one is to price skimming strategy to exploit price elasticity, then inelasticity. Now, tell me, when there is a price elasticity, price elasticity and inelasticity. In which way your revenue will be higher, revenue will be increased. Now, when you are having a price elasticity means what? When the price change, the quantity will be changing more than a percentage. So let's say price change by 50%, but the quantity will be changed by 80%. So it's like for a competitive products, when the other competitor increase the price, they will be going to the other one. So in that case, when the price increase, quantity will be decreased by a high percentage. In that case, your revenue will be increased or decreased. Here, your revenue will be decreased. Your revenue will be decreased. But in inelasticity demand, let's say the best inelastic demand in Sri Lanka is alcohol. What happens? When you increase the price, will the quantity will be decreased by a more than the price increment? Let's say price increase by 50%. In all budgets, government is increasing pricing. But will that affect for the alcohol market a significant portion? No. What happened? When the price increase by 50%, it may change by 10 to 20. So when the elasticity amount, the figure is less than 1, here less than 1, here more than 1. So when this inelasticity happens, when you increase the price, quantity will not be decreased as much as the price increment. So in that case, your revenue will be increased. So your revenue will be decreased by elasticity, increased by inelasticity. So with the skimming pricing, what you have to follow is inelasticity demand. When you have inelasticity demand, you have to do that. So a price skimming strategy to exploit price inelasticity. So that is answer B. Answer is B. Then the next one, fourth question, read it. A brief description on the nature of 5 companies are provided below. Identify which companies mostly benefit by adopting life cycle costing. There are 5 companies. Company P, Q, R, S, T. PQRST. What P says, company makes products which typically have a long life. When you are having a long life, will that matters when you have different types of cost in different years? Will that matters? No. Why? Let's say you are having 100 years of a life cycle. So normally the losses will be happen in the 95, 96, 98, right? So here also profit is bit lower, but here you will be having some profits. And like that, but nothing problem. Why? Because your lifetime is longer. So you can get a good pricing, good calculation for the pricing. The reason is you cannot make 100 years of cost and make a price. You have to do the price revision within a shorter period of time. Now let's say, can we do a pricing for a vehicle by looking at the pricing in 100 years, the cost in 100 years? No. In that case, your price will be higher now. So then you have to do the pricing by few years to few. So in that case, when you are having a long lifetime product, you don't need to have the life cycle costing, because it will overstate or understate your pricing, your cost of the product. So this is incorrect. Then the Q. Company makes product with short product life cycle. Yes. Why? Let's say the product will be only for 2 years Only for 2 years. So this is the first year done. This is the second year done. So you know that when you enter into the market, there will be a high cost. And when you go into the market, the cost will be lower. But at the end, maybe you have a high dismantling cost. So in that case, to give a better price, you might have to consider everything within happen in these 2 years and get a cost. So in this case, when the product is a short life cycle, better to use life cycle costing. Then companies' investment in plant and machinery is quite low. What is this? Companies investing in plant and machinery a low amount. Now, will that be a matter, boss? Will that be a matter? No. Why? That is just an investment. That is just an investment. Then, yes, companies incur high research and development cost. Companies incur high research and development cost. When you have research and development, normally what is happening? We are having these costs in the year which will be happening. So that is the reason why actually these kind of life cycle costing method came into the practice. The reason, let's say you are having 5 years, so in the third year you will be having a research and development of 10 million. Here nothing. But what will happen? In the third year your profit will be very lower than this. So what we are going to do is, we will get this figure and allocate it to all 5 years. So that is the reason why we need also life cycle costing. So here, when research and development costs are there, the higher amount, the significant amount is there, definitely better to use life cycle costing. And the last one, company has high advertising cost. High advertising cost, what is this? Now advertising cost will be happening in each year. Maybe if you say initial higher advertising cost, maybe then that could be considered. But it says just having advertising cost. So I am not recommending in that case. So the answer would be company Q and company S. That is answer C. Answer C. Then the question number 5. Question number 5. Sunnex Limited is planning to introduce a smart bulb and company expects the product will have a life cycle of 3 years. The following volumes and cost have been estimated. Then the years they have given, units given, R&D cost, production cost, warranty cost, dismantling cost. And determine the life cycle production cost of a smart bulb to a nearest rupee. You have to get the life cycle cost of a unit. So, see, first of all, they have given you R&D cost. So, what you are going to calculate is the cost. R&D cost is how much? That is 10 million. So, this is in million. 10 million. You don't need to do like this. You can get this from the calculator at the examination. I am doing this for you to understand. So, R&D is 10 million. Then the production cost. How much the production cost? Production cost is how much? They have given in yearly wise. Year 1, then year 2, year 3, year 4. How much? In year 1, you have 30,000 of quantities, and the production cost per unit is 50. So 30,000 into 50, that is 1.5 million. 1.5 million. Second one, year 2, they have given 80,000 of units. 80,000 of units. Cost per unit is 45. Then that is 3.6 million. 3.6 million, right? 3.6 million. Then year 3, 40,000. 40,000. One is 40. So 40,000 into 40, that is 1.6 million. 1.6 6 million, and last year, year 4, you don't have a production cost. You don't have a production cost, right? Then you have warranty cost. Warranty cost, that is how much? Warranty cost total is how much? Get the summation 1 plus 1.5 plus 1 plus 0.5, that is 4 million. That is 4 million. The next, last one, dismantling. What is dismantling cost? When you finish up the business, how much of cost you have to incur to dispose the assets, liabilities and other resources. So dismantling cost is 2 million. 2 million. Then the total cost. Total life cycle cost. Total cost in all 4 years for this product. 10 plus 1.5 plus 3.6 plus 1.6 plus 4, that is 20 million 0.7. Sorry, 22 million 700,000, right? Then how much total number of products you are manufacturing in the life cycle? The total number of units you will be manufacturing in the whole life cycle, how much? First year 30,000, second year 80,000, third year 40,000, so that is 150,000 units. So 22.7 million. 22.7 million divided into 150,000, that is the cost per unit you are getting, that is 151.33. So they are asking for the nearest rupee, that is 151. The answer should be answer A. Answer A. Right? Then the sixth question. Number 6 question. A company makes the product DF20 and 300 units have been manufactured to the date. Company plans to make 50 units during the next month. Direct labor cost of the very first units manufactured was rupees 450. Estimate the total direct labor cost, and thinking that there is a 80% of learning curve. Now we have discussed the same similar kind of a question when we were discussing the lessons, the learning curve lesson. So question number 6. Then see, it says you are manufacturing 300 units up to now and next month 50. So the total units how much? Total expected units how much? That is 300 plus 50, which is 350. 350, right? And learning index, they have given you a learning index. So you know how to calculate the learning effect, learning index at 80%. How to calculate that? Log 0.80, right? Log 0.80, because this is 80, divided by log 2. So the answer would be, get the calculator and put that log 0.8 divided by log 2, that is minus 0.32119. It will go like that. Then how to do this question? I told you, first of all, you have to calculate the total cost for these 350. Then you have to calculate the total cost for 300. Then you have to get the difference and get the answer for 50. So first of all, we will be calculating average per unit labor cost for 350 units. How to do that? This is the cost and this is the quantity. 350 quantity, this into the power this 0.3219. So you can get the same answer and get this 450 into 350, the answer into the power, the answer you got, that is 68.26. so this is 68.26. This is 68.26. Then what you have to do is you have to calculate average again, average per unit. Now this is average, okay, not the per unit but the average. If you are producing 350 units, the average per unit cost is this. Average per unit labor cost for 300 units. 300 units is how much? So 450 into 300 into the power this one, this long answer. So you get again the answer log 0.8 divided by log 2. Take the answer, memorize the answer in the calculator. Then 450 into 300 into the power the answer 71.74. So that is 71.74. 71.74. Right? Now you know average per unit cost if you are producing 350 and 300. And whatever the difference, you first of all get the total cost of this 300, the difference. How to do? Activity level, I will put in this schedule for your reference. Activity level you can have, then per unit cost we have done this. Anyway, I am remembering again this, refreshing your knowledge. We have done all this. Cannot say we haven't done. We have done. You have to go through these. If you cannot remember, again watch the videos. Again watch the lesson videos, the learning curve. Then do the calculation. So total cost is how much? Total cost is activity level at 350 and 300. Per unit cost is 68.26. Here per unit cost is 71.74. So the total cost would be 350 into 68.26. That is 23,891. 23,891. Then 300 into 71.74. That is 21,522. And the difference of this is the labor cost for this month 50 units, that is 23,891 minus this answer 2369. 2369. So what is the answer they are having? 2370. So answer is A. Now just for a thinking, if they are asking the per unit cost of the next month when they are producing 50 units, how to calculate? That is this 2369 divided by 50. So in that case, it would be 47.38. Right? So you have to get like that. So that is the end of 6th question. So we'll move to the 7th one. The question 7. Question 7. Read it. Standard raw material cost of a unit is set at rupees 1,500. Within bracket they have given, so 5 kilos, 1 kilogram is rupees 300 at the beginning of the month. And due to the exchange rate depreciation, average prices per kilogram has been increased to rupees 400. So because of that, that is increased. So the standard is revising. Thus company considers to revise the standard cost. During the month, company has manufactured 900 units, consuming 4,680 kilograms at a cost of rupees 1,825,000. Total material planning variance, operating price variance, and operating usage variance you have to calculate. Total material planning variance means total material planning variance include planning material price variance as well as planning material usage variance. But here usage is not going to be revised. So only the price, right? So seventh question. So the material planning variances, you have to calculate material planning variances. Planning variance, right? Here the first one is planning material price variance. How to calculate? We have already discussed this. You have to refresh your knowledge, right? So this is original standard price minus revised standard price. This into what? Revised standard usage. Revised standard usage, but standard usage is not going to be revised, so the same standard usage, right? So then original standard price was how much? Originally they are telling what? Originally they are telling 300 per kilogram. Originally 300, but because of this situation, that is increased to 400, so that is a revised one. Revised standard usage is how much? They have manufactured 900 quantity. And per one quantity, how many of kilograms they are using? They have given 5 kilograms of 300 rupees. So 5 kilograms you have to use. So how to get the answer? 9,000 into 5, that is 4,500. So 300 minus 400 into 4,500, that is 450,000 adverse. That is 450,000 adverse. So see, there are two answers, B and C. First one is adverse. The next one, planning material usage variance. So, was the standard change? Standard usage per 1 minute change? No. So then this should be 0. So this is total is this much. Same thing. Then you have to get operating variances. What are the operating variances? So operating material price variance. How to calculate material price variance? That is this price, revised standard price minus actual price into actual usage. So revised standard price is how much? That is 400. Actual price they haven't given per kilogram, but you have to calculate. So they have given for 4,680 kilograms at a cost of 1,825,000. 1,825,000 divided by 25,200. 4680 into 4680. This is the actual usage. So divide 1,825,200 by 4680, that is 390. So 400 minus 390 into 4680, that is 46,800 favorable. 46,800 favorable. Then the last one, operating usage. Operating usage variance. That is how to get How to get it? So that is standard usage minus actual usage, because same old formula. The reason is you are not having a revised standard. You don't have a revised standard, and into this you have revised standard price. So revised standard price, you know, that is 400, yes. Standard usage is how much? Actual usage, you know, 4680 is standard usage. If you are manufacturing 900, you have to use 5 kilograms per one. So this is 900 into 5, 4500 minus 4680 into 400, that is 72,000 adverse. So see which answer all these three are there. Now see, when you do the second one, now here you have two answers. When you do the second one, you could get the answer. Why? There is only one answer with 46,800 favorable. So that is the answer. Answer is C. And the last one, 72 adverse. So answer here is C. But at the examination, to save the time, you don't need to calculate this. If you are having a different answer, you can go there. Now let's say the second answer also same. Then you might have to calculate and see whether the third answer is correct. Right? So then the eighth question, number 8. Number 8, company manufactures two products X and Y, and it earns a contribution of rupees 200 and 300 per unit respectively. The following graph shows the different limitation faced by the company when it attempts to maximize the contribution. Objective function of the company is derived as 0.2x plus 0.3y equal 3000. So you have to, when you are selling 0.2x and the 0.3y, so your total contribution is 3000. So you have to put the input, so the units for the X and Y by replacing them, the contribution. Then they are asking the optimal contribution. Now how they have done this graph? See, you are having a graph like this. Then you are having this and as well this. And like this. So you know, I have already done this when we were doing the limiting factor decision making. I have done in the smart board, right? I have showed you all these areas where you will be having the feasible area. Feasible area is this. And from the feasible area also you have to know in which place you will be having the optimal solution. It could be either this, or this. We have discussed this. Only corner points you can have the optimal. And if you put the numbers, this is A, this is B, this is C, this is D. Now tell me, in A, can you have the quantity? Now this is Y, this is X. Can we have the optimal? No. Why? See, when you compare A and B, here the A, X quantity is 0, and Y quantity is, X quantity is 0, Y quantity is this. But here Y quantity is same, X quantity increased. So in this case, definitely when you compare these two, you have to ignore this. So make sure you don't need to evaluate this. So you have to evaluate this one and this one and this one. And how to evaluate? You can maybe do this to the graphical, but here the graphic is not clear. So you may have to use the formulas and do. We have done this. So we have to find out how much of Y is in this B point and X. And in C point, how many Y and how many X. In D point, how many Y and how many X. So how we'll do first. at point A, at point B. A already done. So what are the two lines that is intersecting? This line and as well as this line. So what are these two formulas? The first formula of this line is y equals 13,000. Y equals 13,000. So this is the first formula. And this line. What is that formula? 0.04x. 0.04x plus 0.012y equals 1000 equal 2400. 2400y. Sorry, 2400. So this is the second formula. Now can you use this formula and find the x or y? No, why? Because this is 0.12. So what you have to do is you have to do what? You have to get the second formula and divide it by 0.12 to get 1y. How to do that? So divide this. We have already done this. If you are watching this without looking the lesson video, please go back and watch, then come here. So we have to divide this by 0.12, this also by 0.12, and this as well in 0.12. So here you will be getting 1y and 0.04 divided by 0.12, that is 0.33333. So which means 1 divided by 3x equals 2400 divided by 1.2, that is 20,000. So this is the third formula. We can use now the third and first formula to find out this. So 3 minus 1. From the third formula you are minusing the first one. How to do? Third one is y minus first one is minus y equals 20,000 is minus this 13,000. So answer is here 7,000 equals 13x. So which means x should be how much? It should be 21,000. Now apply that to the another formula, the first one. So 0.04x plus 0.12. Sorry, we'll apply for the last one. That is easy, no? 3x plus y equals 20,000. So when you put here the 21,000 divided by 3, that is 7,000. 7,000 plus y equals 20,000. So which means y equals 13,000. 13,000. So at point B, the number of units will be 21,000 and 13,000. 21,000 and 13,000. 21,000 and 13,000. Then at point C, what are the two formulas? This line and this line intersecting these two lines, right? So these two lines, those two lines are intersecting, not this. So what are those two formulas? First one, 0.06x plus 0.08 y equals 2,400. That is the first formula. Second one, this one, 0.04x plus 0.12y equal 2,400. Second one. Now can you do this question? Why? You cannot. Here 0.08, here 0.12y. So you have to remove one y or one x to get the answer. How to do this? Convert this to this. How to convert this? 1 into, this is 0.08, no? How to convert this to 0.12? This into 1.5, this into 1.5. So, do that. 0.06 into 1.5, that is 0.09x. Then this is 0.12y, 2400 into 1.5, 3600. This is the third one. So now 3 minus 1. 3 minus 1, how to do? Third one is this 0.9x plus 1.2y, then minus 0.06x minus 0.08y equals 3600 minus 2400. So here the answer 1200 here. This, sorry, this is not 0.12, 1808. Sorry, this is third and second. Third minus second. Third minus second, right? So yes. So this is 0.04x plus 0.12y. Okay, done. So then this and this you can cut off. So the total here 0.05x equals 1200. Equals 1200. So how much is x? 1200 divided by 0.5. So that is 24,000. 24,000. And then this put for the one of the formula. We'll put for the first one 0.06x plus 0.08y equals 2400. So x is 24,000. 24,000 into 0.06, that is 1440 plus 0.8y equals 2400. Then 0.08y equals 2400 minus 1450, 960. So then y equals 960 divided by 0.08, 12,000. 12,000. So at point C, the numbers would be 24,000 and 12,000. And at point D, you don't need to calculate. You don't need to calculate because this value they have given, that is 40,000. X equals 40,000 and y equals 0. Right, now how to get the answer? Now how to get the answer? You have to evaluate in which point you are having the total contribution. Total contribution. So here the point, let's say the point, you will be having BCD and contribution of X. X contribution, X contribution, then Y contribution, then the total. X contribution is how much? At point B, X 21,000. 21,000 into here, 24,000 into here, 40,000. 40,000 into how much? What is the contribution per unit? Is 200. 200. Here 21,000 into 200. That is 4.2 million. 24,000 into 200. 4.8 million. 40,000 into 200. 8 million. So then Y contribution is how much? Here first one Y is 13,000. Second one Y is 12,000. Third one Y you don't have anything. Here the contribution per unit is 300. 300. 300. So here it would be 13,000 into 300, which is 3.9 million. 12,000 into 300, which is 3.6 million. Here 0. The total contribution is 4.2 million plus 3.9 million, which is 8.1 million. 4.8 million plus 3.6 million, here 8.4 million, then 8 million, whichever is higher, whatever is higher, here the second one. So at point C, it will be like that. So the answer is B. Answer is B, which is 24,000 and 12,000. Answer is B here. B means not the point B. Answer is B, which is point C. Which is point C. 24,000 and 12,000. Right. So this is the 8th one. Then the 9th. The 9th question. Those two questions are very small questions. 9th one. 9. Objective of reducing staff turnover most likely to appear in the perspective of the balance scorecard. You know, balance scorecard, you have 4 perspectives: financial, customer, learning and growth, internal process. Now, when the staff turnover reduces means, why staff are going there? Staff turnover can happen because of many reasons. Why staff is returning? Maybe they are good at their place, so they will be getting used to the technology, the usage, the let's say the machines and all. So because of that, what will happen? The growing, the learning is there when the staff turnover is lower. So this is actually because of this what is happening, because customers, financial, internal processes, you cannot have anything. Internal processes you cannot have, but learning and growth is there when staff turnover is lower. So the staff is learning, the growing is happening. So the answer should be answer C. Answer C. This is just a logical. You have to just think. Then the number 10. Which of the following being benefits in big data and predictive analytics? We have done the big data topic, big data lesson also we have done, theory lesson, but we have already covered. We haven't avoided the single lesson. First one, analytics can benefit in any aspect of organization, but some of the most significant results are in customer acquisition, retention, development. Yes, most of the companies using big data to analyze, acquire, retain and develop the customer. So this is correct. Definitely. I have explained through some of the cinemas, the scope cinema, JKH, using those examples I have explained everything. High precision sales forecasting can be important for suppliers of perishable items, which can be achieved using big data. Yes, why? See, high precision sales forecasting can be important for suppliers of perishable items. Why? If you can do the analysis, then you know that these items will be perishable. So you have to only order this much. Likewise. So here, this is also correct. Third one, using predictive analytics. What is predictive analytics? We have done. Predicting the future. So then, risk segmentation, organization can identify patterns that lead to fraud detection. Of course, if you are doing this, then this will lead to this kind of a fraud. We can definitely analyze. This is correct. The last one, using big data, a supermarket is able to discover the pregnancy of a person even before she makes a public announcement. Now, examine is very tricky. Examiner have put a word called supermarket. Supermarket. This is possible in big data. Yes, this is possible. You can analyze by looking at the past data and all. But can a supermarket analyze this? For supermarket, that is very difficult. Why? Because let's say supermarket, you can analyze, okay, what are the things pregnant woman is getting. So in that case, if a male person is going and getting the supermarket item, so they will be identified that male person also as a pregnant woman. Will that be happen? No. So this can be done, but not in a supermarket. So not in a supermarket. So this is correct because this can be done, but not through a supermarket. Supermarket. Right? So this is, so the answer is 1, 2 and 3 only. 1, 2 and 3 only. Answer is B. Right. So we have done the first section. First section, you don't need to allocate this much of a time to do the first section, but since I need to teach, that's why I'm using. So we are moving to the section 2. Section 2. So section 2, question number 1. So question 1. Question 1. This is section 2. Section 2, question 1. ABC and absorption. While Lipod is a hotel that provides ecotourism experience to foreign tourists in Sri Lanka, the hotel provides 2 types of luxury tented chalets, then standard and deluxe. Monthly operating overhead cost of the company is rupees 1.8 million. So blah blah blah, they have given. Company identifies 60% of these costs into this, and the cost of operation center absorb this much. But most probably we need to first of all look at the requirement. Just see the question, but coming to the requirement. Requirement is compute the total operating cost. Is that the direct cost plus operating overhead cost per room night of each chalet under the absorption costing and activity based costing. Then discuss the benefit of applying time driven ABC method instead of traditional ABC method by Whitelipod company. Now you have to know, you have to calculate the operating operating cost per room night. So you have to make sure that in your mind and read again. So then cost of the production center absorbed based on the expected occupancy level of room nights. Maintenance costs are absorbed as 31% of direct cost of each chalet. So what is happening? They are charging 2 different types, different models, different ways they are charging for both the rooms. Then under the normal circumstances, a company can estimate an occupancy level of 80 room nights for standard and 54 deluxe. Then the management of the company wishes to change the current absorption costing system to activity cost based costing, computing the cost per room night. The following information also given. So how to calculate? Then the direct cost per room night of standard chalet is 12,500 while it is rupees 17,000 for deluxe chalet. So how to calculate? So you have to first calculate with the absorption costing, then with the ABC. So this is first one, A, under absorption costing. Under absorption costing. How to calculate? So you should have here standard and deluxe. Standard and deluxe. Standard and deluxe. Then see the first of all you have direct cost. So direct cost they have given for standard, that is 12,500, and for deluxe that is 17,000. 17,000. Then overhead cost. Overhead cost, you are having 2 divisions. Operation center and and maintenance center. Operation center and maintenance center. Maintenance center. So we have to calculate this in a working. So working one, here the working one, that is, so first of all the operation center, right? So the total overhead, they have given the total overhead as how much? Total overhead as, they are telling total overhead cost of the company is 1.8 billion. So 1.8 billion, and from this how much it will be allocated for the operation center? Allocation for operation center, OC, 60%. So total allocation is how much? 1.8 million into the 60%. 1.8 million into 60%. That is 0.80. Right? Then, how many room nights are there? Total how many room nights? Per one, that is 80, per other 30. So you have 150. So how much of operating center cost should be allocated for one room? Cost per room night. Cost per room night. 1080 divided by 150, that is 7,200. That is, sorry, this is 130. This is 130. 80 plus 50, 130. So 1080 divided by 130, that is 8,307.6. So you can put as 1308. 1308. So here operating cost, how to do that? So wait, before that we'll do the maintenance center also. So maintenance center, how to allocate? Maintenance center, how to allocate? So here one room night, 8308, we'll put that. 8308, and this is also 8308. Doesn't matter whether it's standard or deluxe, because that is for the whole room nights they are calculating. And here they are calculating based on material cost, direct cost. Direct cost is how much? 12,500 and 17,000. So how to calculate for that? Overhead is 31%. So 12,500 into 31%. 3,875 here. 17,000 into 31%, that is 5,270. So 3,875. 5,270. 5,270, right? So this is the total operating cost. Total operating cost is how much? Total operating cost is the total of this. So 12,500 plus 8308 plus 3875. 24,683. 17,8308 5270. 30. 17,000 8308 5270, right? So overhead cost here is 31%. 31% of this, 12,500 into 31, 3875. 17,000 into 31, 5270. So 3875 5270. 5270. So the total should be 12,500, 12,500 plus 8308, 3875. 24,683. 24,683. 683. Then 17,000 plus 8308 plus 5270. 30,578. So this is the operating cost as per absorption costing. So under ABC system, how to calculate? You should have a schedule. For this, you have activity. You should have activity. Activity, then the cost. Activity, then the cost, the total cost, and the cost driver. Cost driver, then total of the cost driver activities, right? Total of the cost driver activities. So they have given cost driver, total cost driver. What is the cost driver? Total of the cost drivers. So then per driver cost. Better to have a schedule, so very easy for you to do the calculation. Then how much for standard, and how much for deluxe, right? So the activities they have given everything in the order, very easy to do. Luggage delivery, so you have luggage delivery, then you have reception and billing. Then you have restaurant operation. Then swimming and pool maintenance. Pool maintenance. Then you have handling, pickup and drop off. Handling, pickup and drop off. So total cost they have given. This is 50,000. This is 350,000. This is 800,000. This is 460,000. This is 140. So when you get everything, you have to get 1.8 million. Then the cost drivers. Given here. Number of deliveries. Then here number of bills. Everything in order. Should have to shuffle and give. Then if not very easy for you, I know that this is not coming at the examination. This is the examination, they will shuffle and give. So number of kitchen order tickets. Then number of guests. Last one, number of pickups, drop-offs. So we have done this ABC. You know, you have to allocate the cost based on the activities and cost drivers. The total cost driver is 120 plus 70. That is 190. Then the next one, 80 plus 50. That is 130. Second one, 120. Third one, 120. Then 270 and 195, right? Then per driver cost, how to get? This divided by this. So this is here 263.15. This divided by this, how much? 2692.3. This divided by this. One cost is 66667. So then this divided by this 1703.7. This divided by this 717.94. Right? So how to get for the standard? This is a one cost driver cost. So by standard, how to get? This into how much this is for standard. So see, for standard, number of deliveries are 120. So this into 120 you will be getting for standard. And this into 70 you will be getting for deluxe. Right? So when you get the answer, this into 120, that is 31,579. Here 18,421. And the second one for the standard 80 and for the deluxe 50. So 80, this into 80 you will be getting 215,385. And this into 30 you will be getting 134,615. And the next one, this into 75 and 45. So this into 75, this into 45. This into 75 answer is 500,000, whereas for 45 the answer is 300,000. And this into 160 and 110. Here 160, here 110. So this into 160, answer is 272,593. Then 187,407. And this into 120 and 75. 120 and 75. So this into 120, 86,154 into this into 75, 53,846. So when you get the total, it would be 1,105,711. And here 694,289. And so the room nights, how many room nights you are having? For standard you have 80 room nights, whereas for the deluxe you have 50. So the per room cost is how much? This divided by this, how much? $13,821. And this divided by this, 13,886. This is 885 point something, so 886. So that is the end of the question question 1 part A. Then they are asking, discuss the benefit of applying time driven ABC method instead of traditional ABC. What is traditional? Discuss the benefit. Now, when you are telling the time driven package benefit, you have to tell traditional ABC disadvantages. So, what are the traditional ABC disadvantages? So, traditional ABC system is costly. Why? Is costly since it will what? It will utilize much time, resources and money or cost to implement. So that you have to tell some weaknesses, right? So then what is time driven ABC? So this is a time driven ABC is time driven ABC is a simplified version. Simplified means what? So what they are going to do is it's a simplified version where organizations what will take a time period and do a percentage basis. Percentage basis ABC analysis. So they are not going to look at everything, all these orders for cost drivers and all, but they are getting a percentage from the past data, and based on that they are going to do this. So what will happen? So in this case, it is recommended. It is recommended for this company to use time-driven ABC instead of traditional ABC. That is how your answer should be there. First of all, you have to tell the weakness of the current ABC, traditional, because they are asking select a time-driven ABC than a traditional. So you have to tell the weaknesses of the old one and the benefit. Maybe not, that's okay. But you have to tell what is time-driven, and also better to have some benefits also. Better to include some benefits also. Some benefits also. Then you have to recommend whichever the model you are recommending. Right. So that is done. We are going for the question 2. Question 2. We are starting. This is section 2, question 2, right? So it says, Nippert Limited has earned reputation for the quality tea it produces. The company has 2 divisions, bulk division and packet division. So I always inform you at theory sessions, when you have a transfer pricing question, you have to have the structure first. Then very easy for you to answer. So you have bulk division as well as packet division. This is bulk, this is packet. Still we don't know how they are doing businesses. Then at present all the output of bulk division are transferred to the packet division. And packet division, so what is happening? All the output, 100% of output will be transferred to the packet division, right? Will be transferred to the packet division. Then packet division makes 100 gram packets from each kilo of bulk tea transferred by the bulk division by mixing with different flavors. What is happening? Whatever the kilos, let's say if they transfer 1 kilo, they will have 10 packets. 10 packets of 100 grams. So they are having 10 packets of 100 grams from 1 kilo. So whatever this, you have to divide by 100. So whatever the grams you divide by 100, you can get the packets. Or kilos into 10, you can get the packets. Let's say 500 kilos, which means they have 5,000 of packets, right? So then cost details of the 2 divisions also given. Bulk division variable cost given, fixed cost, selling price. So selling price given 750 and packet division selling price is 125. Now bulk division has produced 9,000 kilograms in the month of June. So they have transferred how much? 9,000 kilograms. 9,000 kilograms means they can sold how much? 90,000 packets. 90,000 packets. Why? For 1 kilogram, they are having 10 packets of 100 grams. For 1 kilogram, 100 grams. How many 100 grams are there for 1 kilogram? 10. So 90,000 packets. Right? Then compute the profit of Nippert Limited for the month of June. So how to compute? Right? So you know now 90,000 packets are there in packet division. So they might have sold this to the external market, right? So how to get the revenue? How to get the revenues? Total revenue of the business. They are asking for this business, total business, not for this, so as a whole. So who are selling to the outsiders? This or this. These are the people who are selling to the outsiders. So number of packets. Number of packets. 90,000. Price per packet. See, very easy if you have this structure. This is a small one. We have done very advanced questions. So here, when you have this structure, very easy for you to identify the numbers and identify the relationship. Right? Price per packet. Price per packet is how much? External market they are selling at 125. 125. So then the total revenue should be then you get the calculator and get the total 90,000 into 125. That is, so we can say in thousands, that is 11,250,000. That is the total revenue. Then what is the cost? What is the cost? Minus variable cost. So variable cost means the cost for this and as this, but only for the company point of view, right? Company point of view, not from this, but as a whole. So variable cost you will have from two different departments: bulk division, bulk and packet. Bulk and packet. So bulk division, they are transferring 9,000 kilograms. 9,000 kilogram variable cost per T kilogram is how much? 650. 9,000 into 650, that is how much? That is in thousands. So after this we are in thousands. 5,850,000. And packet division variable cost, this flavored, because for the flavored the variable cost is 25, but as a whole for the packet division total variable cost should be the price, the charge from the bulk division, which is 650 plus 725, 675. But for the total company, now we have considered the 650, so we have to consider the remaining 25. So 25 per packet. 25 per packet. How many packets? 90,000 packets. 90,000 packets. 2,250,000. So the total variable cost is 8,100. Is 8,100. Then, so this is the contribution. We can get the contribution. Contribution is 11,250 minus this 3,150. 3,150. Then you are having the fixed cost. So you will have for bulk as well as packet. For bulk, fixed cost given. Fixed cost per kilogram of tea is 10. So 10 into 9,000. Or let's say 9,000 into 10. Here 90,000. 90,000 into 8 per. And this is not going to be changed based on the quantity. If it is 8,000, but the total fixed cost should be this answer. So 9,000 into 10, that is 90,000. And 90,000 into 8, 720. So 720 plus 90 is 810. Right? So the profit of the company is how much? 3150. 3150 minus 810. 2340. Right? So this is the profit. This is the profit. Next one they are asking, recommend the minimum transfer price that should be charged by the bulk division if operates under full capacity. Now, you know the minimum transfer price should be what? We learned this. Minimum transfer price. Minimum transfer price is what? Variable cost plus opportunity cost. Variable cost plus opportunity cost. So normally when you are operating at the full capacity, will you have opportunity cost or not? You will have. Why? Because you could sell to the outside market. If you are not operating at the full capacity, which means you have enough space, so you can sell that to the next division. So in that case, you don't have a opportunity cost most probably, unless if you can sell as a scrap value something. So here variable cost is how much? Variable cost is 650. Variable cost is 650. What is the opportunity cost? They could sell this to the external market at how much? It given in the table. That is says 750. Selling price of kilogram to the outside market is 750. But currently they are selling at 650. Currently they are selling at 650. Then what happened? Opportunity cost is the contribution that you are losing. How much of contribution you are losing? If you are selling to the internal division, then selling to the outside, that is 100. That is 100. 750 minus 650. 750 minus 650. So here the total, the minimum transfer pricing should be 750. Why? We may have to tell that. Since bulk division operates at the full capacity, opportunity cost would be 100. Now as an example, let's say they are having a capacity of 900 kilograms, but from this they are selling, they can sell only 200 to the outside. So the rest of the 700 they cannot sell to them. So for these 700 kilograms they don't have opportunity cost. But for these 200 kilograms only they are having. Now let's say packet division is only requesting 700 kilograms, then they could sell at 650. But if the packet division is requesting these 200 also, so these 200 they have to sell at 750. This is the logic. This is the logic you have to remember. You have to make sure at the examination, right? Then the next one, see the next one, right? C, number C, company pays a bonus for its divisional staff based on divisional profit calculated as 5% from monthly profit. If the company has the following policies for transfer price, calculate the bonus received by each division. The first one, option 1. Option 1 is what? Option 1 is full cost plus 20%. Full cost plus 20%. Plus 20%. So, now first of all you have to have the cost, have the price. What is the full cost? Full cost for bulk? Full cost is 650 plus 10. That is 660. This is the full cost, no? And the markup is how much? Markup is full cost plus 20%, no? So 660 into 20%, that is 660 into 20%, that is 132. 132. So the price should be 792. Price should be 792. Then you have to calculate the bonus. So you have two divisions, bulk and packet. Bulk and packet. Then sales. How much the sales? Sales, let's say for bulk, 9,000 they are selling at 792 per one. Here 90,000 they are selling at 125, 90,000 packs. So 90,000 into 792 is, so this is in thousands, 7128, and 90,000 into 125 is 11,250. 11,250, that will not be changed. Here also same. But what is changing is the cost. So the cost minus costs. What are the costs? You have variable cost. So variable cost of bulk is how much? Bulk is 9,000 into the same 650, which is 5850, right? And what is for this? That is this 2250 plus this one, 2250 plus 5850, 8,100. Sorry, now they are getting it for a different price. What is the price they are getting now? 7128 plus 2250, because they are purchasing now at this. Earlier they purchased for 5850, but now they are purchasing for 7128 because the price increased. So 7128 plus 2250, the answer is 9378. Then you have fixed cost. Fixed cost will be changed or not? Will not be changed. So the fixed cost should be same, which is 90 and 720. Which is 90 and 720. Now you are having the profit. Profit means actually the operating profit. 7128 minus 5850 minus 90, that is 1188. Then 11250 minus 9378 minus 720, 1152. So bonus is giving 5%. Bonus at 5% is how much? Bonus at 5% is 1188 into 5%, 59.4. Then 1152 into 5%, 57.6. So this is the bonus in the option 1. We are moving to the option 2. Moving to the option 2. That is the market price. That is based on market price. Option 2. Based on market price. So you have the two division, bulk, packet. Bulk packet. Right? So sales revenue $9,000 they are selling at $750. Here 90,000 at 125. So this is same. 11,250 same. 750 in 9,000 into 750, that is 6,750. And minus costs, variable cost 9,000, that is 650, and here 9,000 into 650, the same old cost, and they are purchasing for this much now. 6,750 plus the variable cost of them, that is 2,250. They are buying at this from the bulk. So this is the price they are paying for them, cost they are paying for them. That plus the additional variable cost. Right? Then 2,250 plus 6,750, 9,000. 5,850, and this is 9,000. Then the fixed cost 90 and 720, and you will have profit. 6,750 minus 5,850 minus 90, 810. Here 11,250, 9,000 minus 720, 1,530. And bonus at 5% is how much? 810 into 5%, that is 40.5. 1,530 into 5%, 76.5. So this is the bonus. Right? Then discuss how the next one. Discuss how transfer pricing may lead to suboptimal decision in an organization, especially when negotiating a transfer price by two investment centers. Now what's happened here? Now transfer pricing should be set to benefit the both divisions. This division as well as this division. But ultimately what is happening? Ultimately, they have to think about the company's overall profit. Overall company's profit should be higher. But sometimes when the outside party is requesting the product for a higher price than the internal division is paying, what is happening? That divisional manager tries to go for the external prices. In that case, this will lead to suboptimal decision, right? So what we can tell is, let's say when divisions are trading based on transfer prices, and if the outside price is higher than internal price, the management of the division tries to sell to the outside and make higher profit. So what will happen in this case, in this situation, company as a whole will not be profitable as the other division will not be able to continue. So this is basically what is happening, right? Okay, so we are done with the second question. We'll move to the third one. Question 3. Section 2, question 3. So this is a bit good question from the capacity planning. So normally very difficult to have question from capacity planning, and this is a good one. NAS Private Limited has recently faced considerable variability in demand. Company is evaluating two short-term capacity modification strategies. First one is changing inventory or changing the workforce. So you know, in short term, in the capacity planning, you cannot change the buildings, lands and all, you cannot change. But in short term, you can change the capacity. So capacity in the sense the resources. It can be either labor, it can be either material, it can be either inventory or something like that. So here, what their intention is, either to change the inventory or change the labors. So you have to evaluate the following options. First one, company change the workforce in short-term capacity and assume closing stock requirement is 20% of next month demand. Option B is company change the stock level while keeping a stable workforce. So the first option is you are changing the workforce. So the employees will be changed, but you are not going to change what? You are not going to change the closing stock, right? Stock you are not going to change. The second one, company change the stock level while keeping a stable workforce. You are not going to change the workforce, but first one, you are changing the workforce. So we'll evaluate both the method. Option 1 is option A, right? Change workforce. Change the workforce. So you have the demand and all, you have to first identify the production requirement. This is previous level budgeting actually. So you have to calculate the production, then how much of number of labor hours will be required. So you have January, February, March. You have January, February and March. Then here you have demand. So demand is how much? Demand they have given for January For January 2000, for February 2500, and for March 2500. So how to get the production requirement from the demand? You have to definitely produce this one. And if we are having a closing stock, the closing stock which will be sold in the next month, that also you have to manufacture. And if you have an opening stock, that you don't need to manufacture because you already done in previous month. So in this case, like you have done in the previous level, BL6 level. So how to do? You have to plus the closing stock. You have to plus the closing stock and minus the opening stock. Minus the opening stock. Closing stock is how much? They are telling closing stock is 20% of next month demand. So from this 20%, 2500 into 20%, 500. 2500 into 20%, again 500. April demand is how much? April demands they have given 2000. So 2000 into 20%, 400. Then opening stock, now January opening stock, they have already given. That is 200 units. This is 200 units. If they haven't given, December closing stock is this one 20%. So and that will be the opening of this. So what is opening stock here? This closing will be February opening. This closing will be March opening. So how much you have to produce? How much you have to produce? The production requirement is production requirement this is 2300, this is again 2500, and here 2400. Now you know the exact number of units that you need to produce. And what is happening? You need to calculate the labor requirement. How much of labor you need? Labor requirement. So labor hours, how many labor hours you need? Labor hours required to manufacture 2300 units. Per unit, how many labor you need? Per unit, you need 2 hours of labor. 2 hours of labor you need. So 2300 into 2, 4600. 2500 into 2, 5000. 2400 into 2, 4800. Then, number of working days. How many number of working days you have? Number of working days. They have given here 22 in January, 19 in February, 21 in March. Right? See, here 21, here 19, here 21. Right? Okay. So, number of working days. This is the working days. If one worker is working, let's say the company has one worker, how many number of hours he can work per month? 22 into 8. 22 per day, the number of hours a worker can work is 8. So 22 into 8. So we'll say number of hours one worker employed in the month. So 4600 into 22, that is 22 into 8, that is 176. 19 into 8, that is 152, and the next one is 168. This is if one worker is working. And now you see, you need 4600 per month. If one worker is working, you will be having 176 number of hours. So how many employees should be worked? How to get? If the total hour requirement is 4600, if the number of employees are 176, if one employee is contributing 176 hours, so if you divide this by this, you will be getting the number of employees needed. Number of employees needed. That is 4,600 divided by 176, which is 26.136. So which means definitely you need 27. Why? Because 26.01 means anyway you need another one to do that. So this is 27. And here 5,000 divided by 152, 32.89. So you need 33 employees at least. And here also you need 29 employees. 29 employees. Then see the existing employees. How many existing employees are there? Existing employees. Existing employees at the number of employees at the beginning is 26. Beginning is 26. So what they are doing is, they are going to change the option 1, change the workforce. Change the workforce. Now they had 26. So to accommodate for this 27, they are recruiting a new one because they are changing the workforce. That is the option. They are changing the workforce, right? So they are new recruitment. New recruitment is how many? Here 1. And existing employees at February is how much? They had 26. They recruited 1. Then they had here 27. And here you have layoff also. Layoff means you are asking them to resign. So here no layoff. You are not going to remove anyone from the business. Now see, 26 you had 1 recruited. Here you have 27 at the beginning. But you need 33. So how many you have to recruit? You have to recruit 6. No removals. 27 plus 6. This 33 will be the opening here. Existing employees at the beginning. Now you don't need to recruit. Why? You are already need 29, but you already have 33. So what is happening? You don't need to recruit. That is 0, but you have to lay off 4 employees. 4 employees, right? So this is done. Then you have to find out the cost. Cost. So what is the cost? You are having a cost for this new recruitment, or cost for layoff, and also for the direct labor hours. Direct labor hours also you are having a cost. For this, you are having a cost, right? So first one, cost of hiring. Cost of hiring, how much? Cost of hiring per person is 5,000. They are hiring 1 here. So 5,000 into 1, 5,000. 5,000 into 6, 30,000. Here no hiring. Then the layoff.